Welcome in everyone. Today I'm revealing a new stock I'm buying for the portfolio and the reasons that I'm buying it. And I will also give a quick overview of the Q4 2025 earnings calendar for January with the companies reporting this week and next week, including one that is in the portfolio. But first, the new stock I bought. Now, I thought this new stock had gotten away from me in this portfolio. That's because it went up over 50% from late November into early January. And that made my future stock price projection show less potential upside. But thankfully for our portfolio, it has come back down over 20% with the current market volatility. So it has given us another chance to enter, and that is the reason that I wanted to show it to you today. If you're new to the channel, your subscription makes a real-world impact for nature here. If you're wondering how, then please check out our channel introduction video. The link is up here and in the description. Now let's dive in. The new company I bought is Zeta Global Holdings Corporation, ticker ZETA. It is a very interesting company with the current AI boom in mind, because Zeta is a marketing technology company that uses AI throughout their business. From customer acquisition and growth to automating campaigns and optimizing spend, to creating content and providing real-time insights across channels like email, web, and social media. Zeta offers companies a suite of multi-channel marketing tools focused on creating, maintaining, and monetizing customer relationships. The company was founded in 2007 and it went public in 2021. The company's headquarters is in New York City and it currently has 15 offices worldwide in 11 countries. And they have 44% of the Fortune 100 companies as customer. Now let's dive into my projections for the company and the stock. Zeta is one of those companies I love because they share their longer-term guidance. In their Q4 2024 full-year earnings report they published in February of last year, they shared their Zeta 2028 plan. They are targeting more than 2.1 billion of revenue, over 525 million of adjusted EBITDA, and 340 million of free cash flow for that year. Now they have not given a GAAP earnings target, which I would have liked, but with these two numbers we can still do a pretty good projection. On their Investor Day on the 8th of October, they confirmed that they are firmly on track to reach these targets. So let's do a projection with those targets in mind. In the table you see Zeta's 2025 adjusted EBITDA numbers. Within the Q4 column, their guide, and in red my estimate of what they will report. With those numbers, Zeta will end up with around 280 million of adjusted EBITDA and around 160 million of free cash flow. If we now calculate a price to adjusted EBITDA multiple, then we take 5 billion, which is the current market cap, and we divide that by the adjusted EBITDA estimate, which is 280, then we get to a multiple of 18. That is quite low, but that is somewhat logical because the net margin is still negative now. If we do the same for the price to free cash flow multiple, then we get to a multiple of 31. Which is also not very high for such a fast-growing company. As a reference, Meta, also information technology and AI, and also growing about 20 to 25% in revenue, will also be at a price to free cash flow multiple of about 31 once their Q4 numbers come in as expected. And Meta is not expensive in the market right now. You can make a good argument that together with Amazon it is the most attractively priced Magnificent Seven stock. Zeta, according to these two multiple, also does not look very expensive at all at the moment. Okay, so let's continue the Zeta 2028 projection with these two multiples. Because Zeta is targeting their adjusted EBITDA margin to increase to 25% in 2028 from 21% now, that means that the price to EBITDA multiple the market is willing to give the stock should also go up. I'm only taking a modest increase from 18 to 20 into account. The price to free cash flow multiple I will keep the same. Quite a conservative assumption because further multiple expansion is quite a high probability in my opinion. But let's use these multiples and multiply them with the 2028 targets. So 525 million of adjusted EBITDA times 20 leads to a 10.5 billion market cap for 2028. And 340 million of free cash flow times 31 also leads to a 10.5 billion of market cap. The current market cap is around 5 billion, so the projection shows 110% upside potential to around $42 from around 20 today, and that in about 2.5 years. Not a bad return in my opinion. But the most interesting things I found are coming up now. I decided to go through their October 8th investor presentation myself instead of relying on AI tools. And first I came across this. So while the earlier information I found had said that they are firmly on track with their 2028 targets, their own presentation slide says that they are ahead of targets. So that 110% upside I projected is probably on the conservative side, which is good news. And then I came across this. They had a slide in their deck on how they are targeting to get to a 30% adjusted EBITDA margin in 2030. A quick calculation of market cap in 2030 with that target would be 20% revenue growth after 2028 would lead to a 3 billion of revenue in 2030. A 30% margin on that would give 900 million of adjusted EBITDA. Keeping the 20 price to EBITDA multiple, we would end up with an $18 billion market cap. Today's market cap is around 5, leading to 260% upside potential to 2030. And the slide after that, they showed their roadmap on reaching 70% free cash flow conversion from their adjusted EBITDA in 2030. So taking the 900 million of adjusted EBITDA from the previous slide and multiplying that with 70% leads to a target of 630 million of free cash flow in 2030. Keeping the 31 price to free cash flow multiple we used earlier, we would end up with a $19.5 billion market cap. From the current market cap of 5, now we are speaking of almost a 4x of your investment in 5 years. That's pretty good. Here is an overview of all the targets with my comments added. So you have everything in one picture if you want to screenshot it. So yeah, really interesting upside potential here. So in our Invest for Nature portfolio, I pulled the trigger and sold a $21 2-week put on Zeta yesterday for about $150. So if Zeta stays below $21 for the next 2 weeks, then I will probably let the put expire and I will be owner of 100 shares of Zeta in the portfolio for about $19.50. In another portfolio where I don't have options possibilities, I bought extra shares straight up as well, so that is of course also possible. That was what I had on Zeta. Now let's dive into earnings season. So Q4 2025 earnings season has started. Exciting times for us investors in individual stocks. Here's an overview of the bigger companies releasing earnings in January. Last week we started with the big banks as usual. This week more banks and financials, Netflix and Interactive Brokers came with their earnings on Tuesday, and Intel will be today after market close. Next week, the first big tech earnings will be out. And the first companies of interest for our portfolio will also release next week. Tuesday and Wednesday, United Health and Elevance Health will release earnings. Those may be interesting because they may be early indicators for Oscar Health earnings that are coming on the 10th of February. And then next week, Friday the 30th, SoFi earnings are on deck. I'm excited to see those. Zeta's earnings will be a bit later. The exact date has not been announced yet, but last year they released on the 19th of February. So it will probably be around that date. Keep track of the channel because the next video is going to be about how I'm preparing the portfolio for earnings, and I will give an earnings preview on SoFi. So subscribe and hit the bell if you want to be alerted about that one. It will be very interesting. So this was the video for today revealing the new position for the portfolio Zeta Global. Thank you for watching. It was not financial advice and I hope you enjoyed the video. If you did, then please click the like button. If you have any questions, then please put them in the comments. I'm glad to answer them if I can. And the comments are very good for the YouTube algorithm, so you would really help me a lot with that. Click the playlist on screen to see how we're building the Invest for Nature portfolio. The next video I'm making will be about preparing the portfolio for earnings season, so very interesting for everyone, I think. Your subscription will also create real impact for nature, so thank you. Because good deeds compound too.